Oh crap. I've just been talking for like 2 minutes and I don't think anyone heard me because I was on mute. All right, let's start over. First, can you hear me? Can you see or can you see the chart and can you hear me? Test, test, test. Please let me know that you can hear my voice. Yes, okay, now says Thomas H. Okay, great. So Jamie Saettele here, SB Midweek Strategy Webinar. And I was just, I guess that was a rehearsal. I just went on for about 2 minutes and the mic was on mute. So I'll just kind of try to summarize what I just said. So current market, obviously extremely choppy. Um, very, quiet sideways, not a whole lot of conviction. But recall that we did, we actually came into this month kind of expecting some of this sideways action, if you will, in the dollar. We had this view going back to 93 and kind of comparing that with 2015. And then when you work forward from there, you have a pretty good match, right? Now, eventually these things all give way. They don't always, um, end up following forever. Otherwise, you just be in an endless feedback loop, of course. But for now, this really fits quite well. And remember, we combine the seasonal aspects and everything with it. So when I look at this, it kind of says, sideways to maybe even up a little bit in the dollar for the next week, week and a half, basically through the end of August, right? And if we can get that, then we would be prepared for the next leg down in the dollar. The dollar generally, and the euro higher generally, right? And probably other things like Aussie, I would think, but this is going to be DXY, so this is more more euro based. However, even having this template, if you will, moving forward into August and everything hasn't made it any easier, right? Still been chopped to hell, chopped to bits here lately. So this is kind of my working assumption. I have a lot more to say at times when I kind of understand or know what's going on trading conditions wise. At this point, yeah, it's range, but it still makes it difficult to trade because you get these spiky moves running through levels that you think you're going to hold and et cetera, et cetera. But we'll do the best we can here up until we get into September, which should be ideally a little better trading conditions for swings, if you will. All right, but DXY. So this is the analog, and if we move to the price chart, remember we had. Let's see here. DXY price chart. So looking a lot like obviously euro, and the thinking being that one, let's combine what we just said with the analog, and let's combine with a little seasonal stuff here, right? So seasonals for the dollar actually bottomed very short term for next week, and this is across all time frames, right? So really the back half of August tends to be relatively positive for the dollar, for DXY in particular, right? And euro negative in particular. So that would have us, sideways to up into the end of August, and then maybe we can turn over again, right? So from an Elliott wave perspective, when we look at it this way, remember 94.50 has been our big level for the dollar. And that's been our big level. We've been looking or thinking where we were going to see resistance for the dollar at some point in August. So I look at it this way, right? Just like the euro, but the opposite. 1, 2, 3, 4, 5, probably your A wave. okay? And when we look at the weakness from here, probably an A wave, right? 1, 2, 3, 4, 5, 6, 7. Double zigzag lower A, right? Rally in B, 3 waves down C, something like this. A, B, C, and then probably still in a D because this is an impulse higher, so expecting another leg up and then a setback. So just the opposite of the euro, right? That's kind of how I'm looking at the dollar generally, I guess. So a lot to chop, not over yet. Probably goes into the end of August, but Elliott wave wise, looking for a bounce here, then another 3-wave drop, and then a final surge that completes the whole thing, and then lower in September. Okay, so that's kind of my working template here, based on the analog, based on the seasonals, based on kind of an Elliott wave interpretation. And as you get into basically from here, from 8-9, we've been in a B wave, right? Is kind of what I'm describing. That is the most difficult period to trade. For swing trades, it's really the period that you kind of want to try to avoid, because it's just super choppy and unpredictable. It's the most unpredictable. The middle of a correction is the most unpredictable point in a market. As you get towards the end, it becomes much cleaner because you can count all the waves and everything. But at this point, we are starting to kind of see the light, right? So like over here, things are about as clear as mud. And as you start to get towards the end of it, as we are now, it can, it starts to make a little more sense. So let's see if we can get, get this D wave, rally, little pullback in E, and then get that final larger C wave push into the end of September, or sorry, the end of August, beginning of September, and then roll over. So, how does this fit maybe with gold too? Because gold, I think, is clearly a big market to pay attention to, or to watch as we move forward. Remember, we are in a pretty positive seasonal, point for gold right now. So hold on here. So if we look at gold, we'll go here. Got a good. This was the analog from a couple Sundays ago, and remember the inverse of back from the top. So we're looking for basically this part, right? The crash part, but in this case, it wouldn't be a crash. It would actually be a huge, huge rally. It's following along pretty well. Continues to line up. It says really the big, the big rally for gold's probably going to be at some point in the middle, towards the middle of September, as it continues to follow. So that leaves us really kind of churning sideways for the next couple of weeks. So certainly fits quite well with what we just talked about, with DXY. And if we zoom in and look at the gold chart, remember we're kind of thinking A, B, and a C wave, right? So this is again just consolidating above important resistance, important support, right? You've got the shorter term line here. Really don't want to see this get much below this trend line, right? If at all, the steeper short term trend line, right? You're in a strong bull here, and you don't want to see gold kind of break any levels here, because the market has gotten a bit popular, right? I mean, you start to see lots of headlines about gold and everything else, but it's shrugged it off, right? We had a Friday reversal, but it's not like we followed through on the downside from that reversal. We just kind of churned sideways, which so far is a good sign if you're a bull. here in gold. So still looking higher in gold. The first big test for this is going to be 1320s, 1325 or so. That level is, if we go back out to the weekly chart, right? It's simply trend line on log scale right up here. It's closer to 1320 now, right? A couple of weeks ago it was like 1325. Now it's more like 1320. So if we can get, up into that region, you might get yourself a little pause, a couple pauses, and then by mid-September, mid-September, it's really ready to ratchet up and go on the upside big time. So really continue to follow the progression in gold, okay? And of course, silver fits the bill here as well. Silver should be good, I think, for a break higher here. Okay, I'm looking for silver to break through. Remember, we had this comparison is really based on the action around the 200-week average. So here's the 200-week average. You can kind of see us testing it now for the umpteenth time, if you will, since the rally off of the low. And it's very similar to back here in 2001 to 2003, right? And how many times did we test it back here? Well, that puts us basically, right here now. So we're at the point where, at least back here in 2003, where we ended up going through it. So I'm looking for that to happen, for us to get through it, then maybe consolidate a little bit, and then you're going to have, potentially a massive move throughout the back half of, the very end of 2017 and then into 2018. Okay, so continuing to really follow these metals markets. These can be big money makers, especially if you have the timing down and you can, use options or something to play some of these possible metals moves. But yeah, silver holding up really quite well. Right. You can see running on the median line, looking for this to resume higher. All right, so those are really the three things, along with the bonds, that I'm following the closest at this point. Right, here are the bonds. This is going to be a 30-year bond. I'm actually looking for resistance relatively soon. I want to see if you can get the 10-year to take out the high from June, and if it does, and the 30-year can stay below, you'd have a good divergence there, right? Might be something that could be something that happens here. Other than that, of course, S&P 500. We did call the top back here. So far, the top is still in place, but for how long? Unsure. It's 3 waves down. I like it. I still like it lower. It does seem as though we are in a feedback loop here, right, with the S&P 500. So if you just take the high from 8.8 over to 8.16, basically, match it, getting a pretty close match here. Okay, down, up, dip, U.S. Open. Let's see if we can get another push higher into tomorrow. All right, if we can do that, then we might actually have a top on near tomorrow's opening for the S&P. So that's kind of something that I'm paying close attention to over the near term, because look, you've got 24.62. Remember, we had 24.53, which is a high volume level from last week. We did fail there. We traded up into there during the U.S. session. Of course, U.S. session trades up right into its high and just closes right at the high. Roll over overnight. See if we can get one more run. If you can get 24.62, that'd be wonderful. That is the 618 of the entire drop from the high. And yes, I do know that at this point it is simply 3 legs down. But this could be a 1-2, 1-2. It could be the beginning of a diagonal. It could be a lot of things, right? Just because it's 3 waves down doesn't mean that it's complete, right? So just keep that in mind. Also, you know, the bigger picture here, folks. We've got a ton of important stuff up here with the S&P 500. Right? With the square root level at 24.88, turning down. We've come back into the area of this median line, right? Finding resistance on it. One more little push, you know, maybe up into the 20-day average would be ideal. And it would also be 24.62 actually, which is right on the 727 low as well. So lots of stuff up there if you can get one more push into tomorrow before you get another leg lower. Okay, let's go through some of the currency stuff. You know, warning you, I guess, again, that not from my vantage point here, things aren't all that clean and clear right now. But Aussie dollar, you know, still like it higher. I mean, you know, you're not trying to reinvent the wheel here, but Aussie's broken out big time, okay? And to me, this pullback and sideways is just that. It's a pullback and sideways before you go a lot higher. You know, so we did take off on the upside here. We came back and triggered it, went higher, and came right back. I mean, it's just real choppy. So maybe we need to get a drop beneath 78.69 here to complete a flat A, B, C. Maybe even dip a little bit below the lower parallel and hit the median line, the bigger picture median line. Okay, but my focus for Aussie is most certainly on the long side at this point. 618 would take you right there too. Yeah, I like the Australian dollar higher. You have 79.16 here. That's a high volume level. That's why it's in red. And all that means is, you know, it's kind of a good pivot to use, right? You can be, you know, bullish above, bearish below. But for me, it's obviously just bullish above or flat because I have no interest in being a bear on Aussie right here. I think that the breakout is significant. You know, I think the weekly chart shows that. Here's that weekly chart, right? Breakout. Here was the 2016 high last week, right? If you continue to pull back a little bit, again, watch for the 78.60s to provide support. And then we can, you know, try to resume higher. What about Kiwi dollar? Kiwi is certainly fallen apart. Actually came into the median line here today from this whole channel. So you've got, you know, the, I guess, July low down here at 72, 72.02 here on this chart. But Kiwi, you know, the big area is probably about 71.40. I've got a better mock-up of this here. Let's see. All right, yeah. So here we have Kiwi. You can see the 200-day average, right, is 71.25 right now. Obviously, increases a little bit as you go forward in time, probably upward sloping at this point. So I would expect that you get a pretty big response for support right there. And this magenta line, that's the long-term parallel. We had this is on the long-term chart or the long-term page. That level, which has been really good resistance, you can see it was not quite resistance back in September of 16, but pretty close. And then, of course, it was resistance in February. And then even had some interesting action around it back in June and late June, right, where it was support. So it seems to be a natural kind of a magnet, if you will, for Kiwi. And that's, that's almost 100 pips lower. So if we can get down there, that 71.30, 71.40 region, 200-day average again, and the important parallel, then you might have, maybe at that point, if Aussie's holding up really well, maybe at that point you get kind of a Aussie's allowed to move higher. As there's not much pressure on Kiwi. I still like Aussie better than Kiwi, but Kiwi could actually be a good short into 72.60, right? Let's take a look at that chart. 72.60 for Kiwi. So if you're looking here at the Kiwi dollar, right? Okay. Square root progressions, Kiwi. So yeah, here's the same chart. You'd even have a lower channel line down here. 72.60. Okay, I don't know if you're going to get that bounce, but if you do, I would watch it for resistance. Again, it was real clean support, of course, back here, right? 718, more or less support on 810, 811. Lows there were 72.51. So you get the idea. If I go a little intraday action, right, take it to a 240-minute chart. You can see this trend line, okay? You see the parallel extended off there. I would look for resistance up there now. Okay, if you get a bounce, I would look for resistance up at that 72. Call it 72.55, 72.60. Okay, so right up in there. Price action too in Kiwi looks a little similar, doesn't it, to back in, was it February, from the February top? Just kind of thinking of this right now. So here's a 4-hour chart of Kiwi, right? Okay. You see you have this. I just remember this because I remember feeling like back here that there was going to be this bottoming pattern off the top. And same here, right? You've got low, 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 and then it fails after it breaks through the high. So if we kind of take this, yeah, it's similar, but it's not, not a great match. I would not call it a great match, but you get the idea, right? Anyway, it's 72.60 if you get a bounce, just like this bounce right here. That bounce, and kind of what I'd be looking for, just to sell for Kiwi. So yeah, 72.60 or so for a Kiwi short. Take it down to say 71.35, 71.40. Really, the 200-day average is the big spot to pay attention to, though. Getting Liz, I do the webinar here. Going into the European close, it looks like we are getting a bit of a bounce on the S&P. You can see how fantastic, when you get a good parallel, how wonderful it can work. Let's see what this looks like on the hourly basis. If I go take it up here, it's really close, isn't it? I mean, look at that. So yeah, maybe a little strength overnight, early Thursday night or early Thursday U.S. session high in the S&P is what I'm thinking. All right, what about dollar yen? We've gone through actually the commodity currencies. We might as well look at dollar CAD first. So stupid move by me, I guess, last week to get out of this dollar CAD position. I just hate the market conditions that are, these are really slow. You're kind of like just waiting for, something to happen, and it's, I don't know. The market doesn't move in your position right away, or if it just sits there, it's the worst. So yeah, we got out, or I got out. I can't speak for everybody here, but I got out of a dollar CAD short position. It took like 8 pips. Stupid, right? Here we are now, like 100 pips lower than where I got out. And, eventually the big area is the trend line down here, 2012, 13, 14. It's going to be at this point, 2350, 2360. Okay. But what about near term? So near term chart from last night, if we can, you're heading down probably towards this 2465, 2470 area. That was a big volume level from back on 728. You've also got there simply the 2016 low, okay, which is 2460, I think. So that area, I would think, probably tries to provide some sort of support for a bounce, as we might be in a kind of a broader sideways holding pattern for the Canadian dollar. Now, eventually, I really do think the Canadian dollar is going to be a great trade, or continue to be a great trade. I mean, we've got oil is acting really good. Oil hasn't acted this good in a long time. If I pull up, for example, like here's crude, okay? It's been quite tricky, but you can see how the center line of the channel here was pretty good support last week, right? And then you had that huge Friday up day, turned lower today or yesterday sharply, but now we are, firming up today. So basically your breakout level is going to be this trend line for crude. You can get through 50. I think it's probably a quick trip up to 53.87 to 54.60 or so. And that's the yearly opening price, and a much longer term trend line, which, we'll deal with it when we need to. But just for the moment, time being, understand that you do have a positive environment in crude oil. If you look at some of the other energies like gas oil, heating oil, they actually look even better. All right. Natural gas, not as clean to me, not as good. Also much more dependent on weather factors like hurricanes and stuff. But very much liking the way the crude's acting off of this center line, right? If it would have, kind of cracked below here, you might be in for a hurting. But as it is now, it's a good sign that crude is holding this median line, which again was a very precise resistance back here on 720. Okay. And the slope is suspect, but there's just nothing clean for me to draw with crude. So we've got, it's based on a line off of the highs. Okay. That's all the way back from June 2016 to December 2016. You can see how it's holding up. Right. Obviously leaves much to be desired here, but it's better than nothing. So with a seemingly positive crude environment, probably puts some wind at the back of the Canadian dollar. So dollar CAD looking down towards, again, that 24.60, 65. If there is a bounce at some point, Before then, then I think you're good at 2630, 2650 for resistance. That red line is just a parallel to the line that extends off of the May high and the June high. Okay, and you can see that's really your original trend line, and that parallel defines everything from that point. So when you take a parallel and extend it off of here, you can see how clean it is, right? Alrighty, so that's the deal with CAD. Those are the two levels I would pay, excuse me, I would pay attention to for the rest of, really probably the rest of August. And if we go into seasonals, you start to actually get a negative dollar CAD again after this week. So, maybe if we can get an end of week rally in dollar CAD, it would be a blessing to fade. All right, what about dollar yen? Okay, dollar yen has been a tricky beast here, and a tricky beast, yet we've had, at least identified good levels. I just haven't traded it very well. The parallels here, and this is simply based on the trend line from January, okay, January 3rd to July 11th. And we plot all the parallels within that, right, 12.5 degrees apart with each one. And you've really gotten the contracting range within this now because you're trading between what would be 62.5 degrees and 37.5 degrees. So I do think, and if you think kind of what I said about the S&P, right? If we can get one more a leg up into tomorrow, and nothing spectacular, right? But just 15 handles or so, which would be like 150 points on the Dow, maybe a little more. If you can get that into tomorrow, then you probably do have a pretty good environment for a pop higher in dollar yen, right? And that would set up the sale or the sell for the short into the 1025, 1050 area. 1025 again, the month open. 1050 closer to really the slope confluence, but that whole area is very important. Okay, you've got this parallel, which has been resistance since the month started, and then the underside, the red parallel, which is more important actually from a bigger picture perspective, right? That parallel, this is log scale. Okay, that's important. This is log scale because this trend line is going all the way back to October 2011, okay? And you can see the touches on this, like to the tick, boom, 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 right? Support this year, boom, boom, boom. Support back here, boom, early August. If we get back up there, you bet your, lucky stars that thing's going to be resistance. All right. So that's how I'm looking at dollar yen. Not real interested in messing too much with like other yen crosses at this point, right? Like I don't want to screw around too bad with with CAD yen, Aussie yen, stuff like that. I kind of want these see a little more clarity before I start going that way. Selling Kiwi up to 72.60 seems like a real nice move at this point if you get it. But being long dollar yen into 1025.50 and then flipping on the short side, also seems like a good bet. So in that sense, you could end up being, I guess, short Kiwi yen synthetically, right? Okay, so those are the things that I probably have the most clarity on is Kiwi 72.60, excuse me, and dollar yen up into 10.25.50. Why don't we go, if we go a little shorter term here, let's take a look at like a 60-minute chart, 15-minute chart. Let's look at 60 on dollar yen. Okay. All right. Well, this hour, since I started the webinar, okay, you have you can see that we're putting in a little hourly reversal bar in dollar yen. I was looking for support to basically hold 109.15, right? But we're going to be back above there after, excuse me, after this hour, it seems. So would seem that, you know, a long dollar yen here for a move up into 10.25, 10.50 might not be a terrible bet for you. Two legs up would be 10.16. That fits the bill, doesn't it? 4-hour chart. Looking for a nice little candle here to finish off the 4-hour bar, which would end in an hour and a half. Euro yen, clean levels. Right, 128.50. That was actually the weekly opening price, and 128.48 was the low from back here, July 13th, and today's low is 128.48. So liking euro yen higher. Could be a bit choppy because if I look at a 60-minute chart, you can count 1, 2, 3. This is probably, probably a triangle, A, B, C, D, E, and then looking for a pop up into 120, or eventually 126, 90, which is the 618 of the drop. I'm not sure if you're going to get that on this run, right? You get this, you could actually, but you know, because if we take the distance here, you're going to get close to that. Actually, going to get a little. You're actually 130 on the breakout, so you could. Okay, what else shall we view here? We looked at DXY. I don't think we looked at US dollar though, did we? I don't think we did. So remember US dollar, this is the one that I thought we already had a top in place. Remember the two equal legs in US dollar from the low here? Right, you had A, B, C. So I think you've already made your top here in this index, right? And that would be that would make sense because the influence of the Australian dollar here, you know, it's going to keep this, you know, kind of weak on the weaker side. But yeah, the election low, two equal legs up. I mean, it's perfect, absolutely perfect. So very short term, this might hold the key with something like, say, the British pound. All right. If we go from the top up here, you can count 5, 1, 2, 3, 4, and then a nasty sideways 5, 1, 2, 3, 4, 5, something like that. So if that's the case, if we have started down here, retrace 618, however, you have an impulse here. So I'm expecting, regardless of whether or not we see another dip from here, I'm expecting us to resume higher in the dollar, but make a lower high, right? So kind of trade up here up to, you know, up, you know, you got A, so this is A, B, C, right? And that could end up helping set up, you know, something in the US dollar, or sorry, in the British pound. So like if we go to the pound, we're getting really close to the major kind of spot or region that we thought maybe should hold for cable. So median line of the entire channel back to the 2007 high, and that is going to come in. If you got there this week, it'd basically be 127. So you would be below this parallel, which is 127.40 or so this week. And then you've got the 1993-2001 trend line, right? You can see here, 93, 2001 was support a couple weeks after Brexit, okay? And that's literally in 10 pips. So you've got a big zone that you need to pay attention here. I have my notes here. I just wrote pound dollar, pay attention soon, right? Sometimes general things like that are more helpful than, pay attention when it gets to 127, right? Just pay attention soon. Like if we start to see some reversal evidence in the British pound over the next couple of days or what have you, maybe even takes weeks, I don't know. But whenever we start to see it, we're going to want to pay good attention and take it seriously, because you're going to have, that coming from a major price zone, right? Obviously, there's nothing at all worthy of any sort of, reversal considerations at this point. There just isn't. But we'll start to pay attention as we get closer to the 27 figure. Okay. And really, folks, that is really it. As far as the stuff that I'm paying attention to, I just don't have much else, right now. I mean, some of the crosses, Euro yen's got good levels like we looked at here, but some of the other crosses I'm not too sure about. So my high going Euro, Aussie, and DAX. I will do my best for you as always, but let's see what we can do here. Let's start with Euro, Aussie. Okay. Euro, Aussie. We had it like this. We were looking for a B wave, weren't we? Well, even if that's going to happen, it does not look like looking for a B wave. Got resistance here, right? See what this channel looks like. It's really steep. I tell you, if you had a reversal bar here, like my bias on this would say, we need another dip. My bias on here would say you need another dip because you got 5 up. Strong wave down would be looking for, this to be a 3 down, right? A, B, C. But gone a little past the point, I think, where you'd want to call this a B wave. Confidence right now in this pair is, I would say, more or less non-existent. I do think you probably get a turn lower from here. Again, just considering the S&P, right, which looking for that bounce higher, looking for the dollar-yen bounce higher, those things which would be kind of risk on over a very short period of time, albeit, but still would be more supportive to me of Australia and the Australian dollar than, say, euro. All right, so I would be looking for a dip here. Let's see what happens when we put on, let's see, hold on. Let me put on this, let's see what this looks like. Because this is obviously a pretty good trend line or slope, if you will, right? Okay. All right. I would say that this is a decent area to sell into, okay? You see this slope line right here, right? See here, off the gap, support here, resistance, very clean resistance, right here on 718, I guess that was 718. And we're getting real, back into it. So it looks like it's 49.75 or so. As far as confidence on how deep this takes you, I really can't say. From a trading perspective, I wouldn't get greedy. Put it that way. I would, if you got a good entry here and it turned over in this region, say 49.75, I would be looking for nothing more than the median line right here, okay? And that would probably take you down again towards around where this, close to this congestion area, call it 48.50, right? So I hope that helps as far as the levels are concerned. One thing, I think this kind of points out a good truth in markets and trading. You don't have to know. Well, first of all, you can't predict the future with any sort of consistency, but it is about understanding clean market levels and where markets are likely to at least react. If you can do that, then you at least keep your losses small because you'll have good entries and you'll know quickly if you're wrong, right? And once you do, even a lot of times if you're wrong and you turn, you can at least go to break even, okay? So you won't lose money. And then a couple times a year that you might catch a 300-point move or something, great, and that's how you'll end up basically making your money. But yeah, so 49.75 resistance, 48.50 or so support. I guess with an outside chance that you do end up doing the C wave thing down here. All right, what about the DAX? Okay. Well, we ended up going 2 equal legs, didn't we? But this looks more like 5 legs down, doesn't it? 1, 2, 3, 4, 5, right? You can see it. 1, 2, 3, 4, 5. So my inclination here kind of be more of a sell on a rally type of deal here. And I'm glad that you asked me to look at this, because this would seem to make a little more sense on euro, right? Like if we get that euro drop, get the euro drop and get maybe that final corrective low in the euro on the counter trend rally in the DAX. That would seem to make sense. So 618 here is going to be 12,566. I'd be looking for resistance up there. You can see the parallels here, right? So like these parallels, which are simply based on the 2016 trend line, right? That's February, and that's Brexit right there. That's June. Those parallels, all the action there, right? To me, that's kind of going to end up being your major point to pay attention to. Maybe not one or the other, but just in the area between them. So yeah, Mahai says on a longer term we expect the DAX, right? So that while that's true, because you have 1, 2, 3, 4, and then this huge long rally from here, which is probably a 3. What I would expect though is that now that you have 5 down, you probably need a rally and a dip, and then you can go higher from there. So it's like a tree branch. Work from the work from bottoms up with this, right? Once you see, for example, 5 waves down, you expect a rally, but you would also expect the rally to prove corrective. So for me, this would make sense in getting at least, a period of near-term weakness in the euro as you get a bounce in DAX. And euro, by the way, remember, so we looked at this during the last night, during the update, but you've got 1, 2, 3, 4, 5. That's a wave A. Everything since then is completely corrective. So it's probably, and my guess is probably a triangle. A, B, C. Thinking you're in a D, it's going to carry you down towards the 117 area, and then the bounce. Remember, it's the exact opposite of the of DXY. And so once this is complete, A, B, then you can get a final spill in wave C lower, okay? But yeah, I'm glad we looked at the DAX there, because that makes a lot of sense. Making this little base here and moving higher, but facing resistance up here, right? So what we're thinking about here, Mahai, would be A, B, C, okay? And then you can go higher again. Let's see if we can try to get a level. So you might end up getting, or I'd say it would at least be a very common place to get a low on this median line, right? Or or near it. I mean, you can see the levels that have hit it, right? So I'd pay close attention there. And this, this goes, I guess, for euro as well. Might be on this level, 2015 July high. So a little like this. Boom, boom, boom. A, B, C, and then you can go higher again. All right. So I hope that helps. If there are any other questions, I'd be happy to take them. Otherwise, I'm going to shut her down here and get this posted. and get to work on some of these markets. Try to figure out when and where. You can do all the work you can, by the way, or that you want, but eventually the market will just kind of let you know. It just kind of lets you know what the deal is. Alrighty then. Seems like we are good to go here. All right, so I'm going to wrap it up here. Thank you all a ton very much, as always, for attending. Thank you for your time, and we'll get this up and archived for those that are either late to the show or those that simply want to view it again. But yeah, we went through early on. We went through dollar, silver, gold, S&P, then kind of went through the majors. Bottom line, folks, sideways, maybe a little higher on the dollar into the month end. In this September, things should probably get pretty interesting again, especially with the metals, and so probably especially with dollar yen. Okay, that's it for me. Jamie Saettele here, signing off. Take care.